Good morning. My name is Paul Bleiberg, and I'm Senior Vice President for Government Relations here at National Milk. When we had the opportunity to present to you a year ago in New Orleans, we gave you a snapshot of what we expected the legislative landscape to look like for the year 2020. And I'm here to tell you today that the landscape has turned out to be anything but we expected a year ago, as in all walks of life. That hasn't kept us without lots of work to do, though, as we're going to talk about here. Both from the congressional vantage point and the agency vantage point, the government has been hard at work providing Americans all walks of life with relief from the totally unprecedented and very challenging COVID-19 pandemic. I'm going to begin my comments talking about congressional action that has taken place to provide relief to all Americans, with particular emphasis, of course, on the dairy sector. From the beginning of the year, Congress has enacted several major laws to provide economic stimulus and support in response to COVID-19. While there have been a number of significant packages, and we're going to talk about a few different items here, I'm going to focus primarily on the CARES Act, a large law passed in March that provided support for all walks of the economy, all sectors, but critical support in particular for American agriculture. Roughly $24 billion in funding was provided for the Department of Agriculture to assist producers as they manage the impacts of the coronavirus pandemic. In particular, the bill included a $9.5 billion coronavirus response fund to help a number of different producers through this whole year. Dairy received targeted support as part of that fund. And the bill also included $14 billion in additional funding for USDA's Commodity Credit Corporation. And as we've talked about in past presentations, that fund is used by the department to pay out farm bill programs, trade aid payments, and many other programs of importance. But given the added demands on the department this year because of the pandemic, everybody knew that more funding was going to be necessary, and that infusion of $14 billion was therefore very important. These funds provided by Congress in the CARES Act became the basis of USDA's coronavirus relief package. And I'm going to talk a little bit more in a few minutes on several elements of that Congress was involved in. But for now, I'm going to turn to my colleague, Jaime Castaneda, who's going to begin to provide an overview of the work that the USDA has done.
My name is Jaime Castaneda. As you know me, I work on a number of different issues for national milk producers. But today, we're going to focus with Paul and Claudia about the efforts from a congressional and federal side and the efforts that National Milk did to try to support dairy farmers. By now, you all must be experts on CFAP payments, but that doesn't mean that there are more questions than answers for a few of you. Although it is true that USDA developed the program, Congress provided the funds. And it was the great work of Paul Bleiberg and Claudia Larson that gave us the tools to work with USDA to make it right. I think we all agree that this type of government support is not ideal or desired, since it is not the way farmers want to make a living. However, for us at NMPF, there was no choice other than ensuring that dairy was going to be treated fairly in this package. We have had too many years of bad prices and problems, and I certainly believe that no one should feel that dairy farmers didn't deserve this funding after so many out-of-control dealings and actions have prevented our chances to see a cycle of higher prices in the past 3 years. Since USDA was going to develop the program, and of course we had a bad experience with the trade mitigation formula used for those payments, we put forward within NMPF and the help of Peter Vitaliano, our chief economist, a concerted education of our government officials that resulted in what we believe has been a decent return to our dairy farmers. Does it cover all the losses that you incur? Maybe not, but it certainly covered most of them. Was everyone treated equally? Absolutely not. And Paul will discuss more about this issue. It certainly wasn't because NMPF didn't pursue an equal treatment for all farmers, regardless of their size or ownership structure. Paul and I continue to answer questions from the producer community as to what is available and what is not. And most importantly, we haven't stopped trying to address the concerns of our producers, which Paul describes some of the main highlights in the next slide.
So to pick up on the comments that Jaime made, I'm going to provide a brief overview of some of the work and some of the successes that we were able to have here in the process of working with both Congress and the Department of Agriculture on the Coronavirus Food Assistance Program. First, once the CARES Act was passed at the end of March by Congress, it became critically important for us to make sure that dairy was going to receive significant funding from the Department of Agriculture in the new program that they rolled out. Now, as we've stated before, our share of trade aid and some other past programs hasn't always been what we've wanted it to be. It hasn't necessarily reflected the losses that we felt we endured in specific situations, and we were determined to make sure that the work done this go around would be a better reflection of these challenges that dairy has faced. So the first thing we did was work to secure strong bipartisan and bicameral backing in Congress to urge USDA to provide significant, robust funding for dairy as part of the assistance package that they put forward. We had strong support from Democrats, from Republicans in both chambers of Congress. We had key congressional leaders, key agriculture committee leaders, all weighing in with a similar message, which was to provide robust support for dairy. The other part of that effort was the work that Jaime did and others did working directly with the USDA staff to communicate the losses that we were experiencing and to communicate that data to help achieve a formula to determine farmer support that would be that significant improvement that we needed over the share we had received in some of the past programs like trade aid. And that was a critically important step to communicate to USDA the scope of losses, both already experienced and anticipated in the dairy space. And this was important because when we were first talking with the department and with Congress in late March and early April, the effects of the pandemic had really just begun to take hold in the dairy sector. And so while some sectors of agriculture might have been able to point to losses earlier in the year, we were actually starting to see a light at the end of the tunnel, as Jaime said, heading into 2020. And it wasn't until things really began to shut down that we started to see the impact as demand dried up. So we had to do work to communicate to policymakers the expected losses that we would see going forward. And that was a critically important part of what we did. Similarly, as the program was being rolled out, we wanted to make sure that as good as this program could be, that it wouldn't get in the way of risk management programs or the Farm Bill safety net that was already in place. And so we had to work very carefully, and Jaime did great work here ensuring that DMC as well as other risk management payments would not be deducted from a farmer's CFAP payment. So if you're in the dairy margin coverage program for 2020 and you were getting payments, or you're in the dairy revenue protection program for part of the year, you would not have those payments that you received be deducted from your CFAP payment. This is a special disaster assistance payment where we thought it was critically important for this to be whole and not to be reduced by, long-term risk management, good decisions that farmers have made. Finally, going to a point that Jaime made earlier about making sure we treated all farmers equally, we conveyed to USDA and to Congress the importance of making sure that this disaster assistance flowed according to scope of loss and according to need, knowing that many of the losses experienced were on farms that were larger. As much of the milk produced in the country, of course, is produced on farms of varying sizes. We wanted to make sure that assistance was not only focused on one group of producers, but was provided in significant amounts to all farmers. We were not the only ones in agriculture that felt this way. Our friends in the livestock sector and in the specialty crop sector, where costs of production are very high, felt the same way. So we worked to build a cross-industry coalition and a bipartisan bicameral coalition in Congress to oppose payment limitations on the coronavirus food assistance program. We had a quarter of the House and a quarter of the Senate roughly weigh in support of this effort. And as a result, the original $125,000 payment limit that was first floated in the program was raised to a $250,000 limit per commodity, and in many cases, an even higher limit of $500,000 or $750,000. Now, we continue to work, obviously, with producers to work out individual scenarios that they need to resolve with the Department of Agriculture based on ownership structure or things like that. But we were very pleased to be able to move the bar a bit here on the payment limit issue over the course of significant months of work, both with Congress, with the department, and with friends in industry. Now I'm going to turn back over to Jaime to talk about a number of the other successes we've had in the CFAP program. In addition to the work he did dealing with the formula and the treatment of risk management payments, he also did very significant work here on some of the nuts and bolts of this program as far as treating all farmers fairly.
Thanks, Paul. Certainly, it all starts with amazing work that you and Claudia did in so many areas and issues, as you will hear from Claudia Larson about PPPs and small business loans. As you all know, dairy farmers haven't been ever in big government programs like the crop side has been. So our experience with these large payments has been limited. That limitation actually created some additional hustles or perhaps problems that we encounter as we begin with CFAP 1 payments. Under DMC, we have no payment limitations. We have not been informed of the many restrictions that USDA has when it pays farms. And of course, the trade mitigation payment were so low that it didn't raise any of the concerns that we had once we began receiving the CFAP payments, the CFAP 1 payments. Some of the issues we were able to address, like securing fair treatment for trust. But as we speak with USDA, this seems to have some interpretations for trust and LLCs that are not very favorable if you have a general partnership within that trust. Although for others, now trust will be treated as LLCs, and more than one individual who owns that trust will be able to attain additional payments. So it is a big win. It has been a significant success story to change USDA perspective on this particular issue. But we're not suggesting that we are done. We're going to continue to work to ensure that most of the farmers continue to have access to all the payments. Another important change was the direct attribution on LLCs, and in this case also trust, which prevented the association to get as much as they were eligible due to the way USDA was treating the distribution of the funds associated to the percentage of ownership. So in other words, if the farm was eligible for the entire 750, now it doesn't matter whether the percentages of ownership within that LLC prevented the farm to actually get that total amount. Finally, we have requested that within the COVID-19 efforts, the Agency of International Development, or AID, and USDA work together to provide non-fat dried milk to poor countries in need. This is very important because there is a lot of countries out there that are in need of this great animal protein. But one of the key elements of our request is that we should not affect in any way commercial sales. So with all of this, we think that National Milk has put forward a true plan to make sure that not only CFAP 1 in retroactively or CFAP 2 allow for the majority of farmers to obtain some kind of additional payments, in addition to trying to deal with other types of problems like obviously non-fat dried milk stocks and other types of issues.
Let me now turn to the Farmers to Families Food Box Program. From day one, our executive committee and our board of directors challenged us to increase demand to help the supply chain problems that we were encountering within the regular channels due to the pandemic. Pro market and economic analysis, we also knew that increasing demand would be critical to the overall health of dairy farmers and the co-ops. Although the program had a rough start with some mistakes that the department recognized early, we strongly believe that the intention to increase demand from products from farms and provide those products to the most needed in the United States was there from the very beginning, knowing some of the many individuals that have been involved in the delivery of the program within the Department of Agriculture. The program has created some unintended consequences regarding prices. We understand that. Nevertheless, the amount purchased has helped the industry enormously, and farmers were able to continue to produce milk at a decent price. We started with $3 billion, again, thanks to the great work of Paul and Claudia for overall purchases, but with the specific numbers for dairy, which reached levels such as $600 million in the first two rounds from May through August. Most of the money that was not spent in the first round was spent in two rounds, 2.0 and 2.1 programs. In addition to adding new vendors and removing others that didn't comply with the requirements in the first round, that programs 2.0 and 2.1 added new locations, which was an incredibly important improvement over the first round of food boxes. Finally, Secretary Perdue added another $1 billion through October 31st, using a combination of the CARES Act funding and CCC money for fiscal 2020. In round 3, there has been more variety of products, including butter, and greater reach throughout the United States. The program was supposed to end late October, or unless new money was allocated. However, the department decided to use $500 million of unused CFAP money allocated under the CARES Act to provide combination boxes to people in need through December. So this $500 million now is going to be primarily not for a specific products, but a variety of products that would include dairy. At this stage, we think that unless Congress provides additional funding, the program will cease by the end of this year in December 30th.
Hi, I'm Claudia Larson, Director of Government Relations for National Milk Producers Federation, speaking really briefly this morning about some of the SBA Small Business Administration support programs that we have seen come out of the various COVID relief packages that have come out of the Congress. With the CARES Act passing in March of this year, there was the creation of 2 small business programs that agriculture could access. One was the Paycheck Protection Program. This was a brand new program created in the CARES Act. And the other was the creation of COVID-specific economic injury disaster loans, or EIDLs. The CARES Act created the Paycheck Protection Program as a brand new program, whereas for the EIDL loan program, it created specific COVID-19 loans, which agriculture ultimately gained access to. So quick overview of these 2 programs. The Paycheck Protection Program, it was, again, a new program created brand new in the CARES Act, and it's really focused on keeping the small business workforce employed. Accordingly, loans are to be spent on very specific expenses with a huge emphasis on payroll, given the purpose of the program. Loan forgiveness for the PPP loans is available, and in general, any small business with 500 or fewer employees can access the Paycheck Protection Program. The Economic Injury Disaster Loan Program, specific to the COVID-19 disaster, did ultimately expand eligibility for EIDLs to agriculture. We'll talk about that in a second. But the EIDL loan program, more specifically, it's really aimed at helping small businesses recover from disasters in general, which allows more flexibility in spending of the loans. It provides for small emergency grants, which do not have to be paid back, as most government grants don't. And ultimately, again, agriculture was able to access the EIDL program, which is new for agriculture. In general, agriculture cannot access many small business programs, including the EIDL program, but ultimately we were able to get access for agriculture to this program. Both the PPP program and the COVID-specific 19 EIDLs were a little bit new and a little bit different. And as is true with most emergency bills, it was rolled out quickly. There were some problems, there were some obstacles, and there was a lot of work that needed to be done to make sure that these programs worked for small businesses, and then especially specifically for agriculture, given agriculture really did not engage with the Small Business Administration, did not really access most Small Business Administration programs before the coronavirus. So regarding the PPP program, I think a lot of people saw how quickly that was rolled out and saw that there were a fair amount of difficulties with a lot of businesses accessing that program. Agriculture specifically had difficulty accessing this program because a lot of our lenders did not have pre-existing relationships with the Small Business Administration. which just because, again, agriculture typically has not engaged in the Small Business Administration loans. And then also there were other various obstacles with the PPP program that agriculture was facing. Similarly, there were some struggles agriculture had accessing the EIDL program, given initially SBA decided that Congress had not, in fact, granted agriculture access to the EIDL program, although many in Congress believed that it had. So we worked in these programs to increase dairies' access to these programs. And we saw some successes with the EIDL program. We were able to secure clear statutory language that farmers are, in fact, eligible for the COVID-19 specific EIDLs, which was a huge win. And then ultimately, when they reopened the program with some additional funding, agriculture was granted first access to submit new EIDL applications in that second round of funding. And we worked very hard with some of our champions in Congress, especially those on the small business committees in the House and Senate. We worked very hard with other agriculture stakeholders as agriculture as a whole was really struggling to gain access to these loans. And so securing that clear statutory language and really getting agriculture meaningful access to the EIDL program were some pretty big victories that we saw. With regards to the PPP program and our work there, we were able to secure broadest eligibility for agriculture possible, meaning it was limited based on just only on employees. It was not limited based on income, which was an issue that agriculture enterprises had with SBA programs in the past. So we were able to, again, sort of overcome some of the pre-existing obstacles that agriculture had in accessing the Small Business Administration programs. We were able to overcome that here with PPP, securing the broadest access possible for agriculture. And then secondly, we saw Congress provide a set aside of $60 billion for smaller lenders when they provided additional funding for that program. And this really gets at the difficulty that farmers and others in rural communities had accessing the program in general that I spoke about a little bit ago. So there was a set aside here for some of these lenders that do have the pre-existing relationships with our farmers, such as small lending institutions and credit unions and things of that nature. Looking forward and kind of where we are now with both of these programs, there has been a pause on the PPP lending because the authority for SBA to guarantee these loans expired in August. There's been a lot of work here to both improve PPP. There's been a lot of work to streamline loan forgiveness. There's been a lot of work here in Washington to get together some legislation and some guidance that will make the program better for all small businesses. And that has been sort of wrapped into an additional COVID-19 response, which, as we've seen, has stalled moving forward. So there's a lot of work here. There's a lot of ideas here for improving the program. Ultimately, we're hoping to see the work that we've been doing here become law. Until then, we are continuing to work with the small business committees to get guidance from SBA, given it looks like Congress is going to pass a law. So we are continuing to try and get further guidance from SBA to see improvements to the forgiveness aspect of the PPP program, as well as to address some of the other obstacles that some of our farmers have faced. One of the big areas here that we've been working both with the Congress and then also with our discussions with SBA has been working to expand access to PPP for our sole proprietor farmers. This is an issue we've seen it has to do with how sole proprietors are required to file for the loan, required to apply for the loan, has been preventing those who have a net farm income of 0 or a negative net farm income from 2019. It's been pretty much barring them from gaining meaningful access to the program. So we've been working with our champions in Congress. There is a bipartisan bill in the House that we've been working really hard on. There's a companion bill over in the Senate. We've seen this proposed in the various COVID-19 responses that have been coming out of the Senate. So we are hoping to see a fix there. But again, until we see that COVID-19 response package pass, we're continuing to work to make sure that SBA knows that this is a problem and that everyone knows that we need to see some streamlining and forgiveness and ways to make these programs work better for dairy.
We're going to shift over now to a legislative update on a couple of other areas. As much as I said that this year turned out to be completely upside down and we mostly focused on the COVID-19 pandemic, we still had work to do in a number of other areas. I'm going to turn first to Claudia Larson, who leads our efforts on Capitol Hill on agriculture labor issues, and she's going to give an update there.
Thank you, Paul. So for a quick update on our efforts on Capitol Hill regarding ag labor and workforce, as many of you may remember, at last year's meeting, we spoke a little bit about a bill that we've been working on in the House, being led by Congresswoman Zoe Lofgren from California and Congressman Dan Newhouse from Washington State. It passed in December by a vote of 260 to 165. The bill, with regards to what we need in dairy, provided protection to our current workers and their families, and then also granted dairy access to the H-2A program, which were really the two big goals that we at National Milk had been working for while we worked on crafting that bill and building bipartisan support for that bill. Again, we worked really hard in the House of Representatives to build as much bipartisan support as possible for that bill, knowing that once it passed the House, we would be shifting our focus to the Senate. And we wanted to make sure that the Senate took this issue seriously and will work on another bipartisan bill that would hopefully both meet our needs, but then also have a chance of becoming law. So after the Farm Workforce Modernization Act, again, passed the House in December of last year, we shifted our focus to the Senate, wanting to take up the issue of ag labor and then strengthen some of the components in the Farm Workforce Modernization Act to work even better for dairy than the bill that ultimately passed the House. So in our efforts to build bipartisan support in the Senate for meaningful ag labor reform, National Milk hosted a fly-in in March in conjunction with our March board meeting, wherein we brought 54 dairy farmers to the Senate to advocate for ag labor reform that works for dairy. The next week, the Senate shut down, as did a lot of the country, due to COVID-19. Since the Senate shifted its focus to more COVID-19 specific policies, we at National Milk have continued our work in the ag labor space, focusing really hard on protecting access to our current labor pool. NMPF has also been working to advocate for producers as they continue to adjust to the COVID-19 workplace needs, advocating on behalf of our farmers and our co-ops to make sure that they're getting the resources and support they need from the government so they can continue to support their workforce and protect their workforce amidst the pandemic. And now we'll turn it back over to Paul to discuss our efforts in labeling enforcement.
Thanks for that update, Claudia. I'm going to talk now about one more issue, which is our work to urge the Food and Drug Administration to finally, after decades, enforce the standards of identity. In other words, the definition governing what can be called milk. While Clay Detlefson and Michaela Hanselman, my colleagues on the regulatory team, will talk more about this issue as it relates to FDA's actions, I'm going to give a brief update on what's happened in Congress. And as much as the COVID-19 pandemic has really taken up most of the oxygen this year, before the onset of the pandemic in March, we were able to see a couple of important steps through to fruition this year. First, in January, NMPF testified in support of the Dairy Pride Act at its very first House legislative hearing. After several years of being introduced, the House Energy and Commerce Committee decided to take up the Dairy Pride Act and actually give us the chance to talk in favor of the bill and make the case for it. This was a really great opportunity for us because the bill sponsor, Congressman Peter Welch from Vermont, was there on the committee to ask really helpful questions. Other members in both political parties on the committee were also very helpful. Our Executive Vice President, Tom Balmer, did a fantastic job testifying and laying out the case for why this law, as simple as it is necessary to solve this problem. On the heels of that hearing, we had bipartisan letters in the House and Senate finally urging the new FDA commissioner, Stephen Hahn, to take action. In his confirmation hearing last fall, you'll recall, we stated that he committed to taking a look at this issue and voiced support for clear and transparent labeling. We thought, now that you're confirmed, Mr. Commissioner, and on the heels of this House legislative hearing showing that Congress is starting to lose patience here, let's send another message off here. And that's exactly what happened. A large group of members in the House and a number of members in the Senate weighed in, urging action. And then this summer, in the thick of the pandemic, work continued a bit on other areas. The House of Representatives moved its agriculture and FDA spending bill to fund the government for the 2021 fiscal year. And while that bill has not yet been signed into law and hopefully will be resolved in conclusion in the coming months before the end of the year, we worked with a bipartisan group of members of Congress to add an amendment to the bill to provide funding to enforce dairy product standards of identity. And this is something we haven't been able to do before, but this is a great example, following on the legislative hearing, following on the letters, following on all the language we've had in past bills of Congress's patience wearing thin. And Clay and Michaela will talk quite a bit more about the work being done on the regulatory side, but there absolutely is a legislative hook to this issue. And the movement here that we've seen this year, both in the Energy and Commerce Committee and seeing funding added into an appropriations bill, indicate that we're heading on the right track, and this is only going to continue to be a priority in the coming years. So in conclusion, we've given updates today on a number of different topics, much of which pertain to the COVID-19 pandemic, both the economic relief and the small business relief provided. But we've also given you a snapshot into some of the legislative work that's gone on other issues in the meantime. We hope you tune into some of the other presentations as well to get a full picture on the different elements of this work. And thank you for the opportunity to talk today.